Hello, traders. Gary Wagner here. Approximately 11:30 in Honolulu, 5:30 in New York. It is Thursday, 15th day of July, 2021, and this is the daily report for gold and silver. We had a nice moderate move in gold. We had a strong move in silver, and that occurred as Jerome Powell had his second day of testimony to Congress, and he alluded to the fact that they're willing to let inflation run at the current levels. What we did is send out a trade alert. We'll talk about that in particulars when we look at our charts and the price board, and that begins now. Traders, we certainly had a nice move in gold, currently up $5.30. That's 0.3% at $1,830.30. There are some key significant importance to that price point. We'll talk about that when we pull up our charts. We did send out a trade alert, and we entered the market on a dip this morning at 1822. We'll cover that in detail once we pull up our charts. One noteworthy fact of today is we've had this rise with a rise in the dollar. So we actually had headwinds from the dollar up about 0.14%. It's currently at 92.54.5, and it did rise today along with gold. Traders, this first chart that we are looking at is a standard candlestick chart. Each candle represents a half an hour in trading. The reason that I have put it up is I have just put up the trade alert that we sent out via email, as well as the SMS text message. They are now on the screen, and you can see that we recommended going long the August futures contract GCQ1, placing a stop at 1787. We'll explain the stop, but in terms of the market itself, you can see where the day really began, and we saw that the market really traded lower within the first couple hours of trading, actually trading to a low of approximately 1820. So getting in at 1822.80 is quite an excellent feat, because that allowed us to get in on the dip, and the market is currently trading at 1830.40. This next chart that we're looking at is an extremely long chart, which begins in March of 2020 in terms of our data set used for a Fibonacci retracement, and takes it up to the all-time high at 2088. When we look at that, we can clearly see that we are in a rally. There is no doubt about that. And more importantly, what we can do is to actually uncompress this chart to look at current data and expectations, which requires a setup. The way you want to look at it in terms of our major wave count, we're using the Elliott wave here, is the lows in March created our wave 1. We then had our wave 2 correction, our long wave 3, and that took us up to about 1920. Then we had a pretty steep correction, taking us to the final wave 4. We are now clearly in a fifth wave. That being said, the expectations, and this is not a single rally, this would be a stair step up, is as high as $2,000 per ounce. You can see that right here. Now, the way I'm looking at it is our short-term levels of resistance. And when we do that, we can see we are right at the 200-day moving average. That should be taken out fairly easily. Then we have the 50-day moving average, and then the 61.8% retracement. That comes in at 1843.70. Aside from that, we've got our top at 1920 and our 78% retracement at 1946. So traders, I expect to see a count something like this: 1, 2, 3, 4, 5, that takes us to these levels. Obviously, the actual corrections could be sizable and deep, wave 2 as well as wave 4. We can also look for wave 3 to be our exceptionally longest rally, and we are clearly in wave 1 of our 5 count. So getting in at 1822, depending on the level of corrections on 2, will determine when we get out. But these are the first areas we want to look at, 1843 in particular. And then above that, there really isn't any technical technical resistance until you reach this high, the top of 3. And that comes in, of course, at 19.20 per ounce. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.